Markets are near all-time highs, and for the past couple of years, it feels like equities only go one direction, up. For the second half of the year, however, do we need to take another look at balancing our portfolios? And what could investors do to make the appropriate decisions for those portfolios? We're going to break down the latest for you right now on UBS Trending. Hi, everyone, and welcome to UBS Trending. I'm Anthony Pastore. Please have me welcome Matt Orton to the studio from Raymond James Investments. Matt, nice to have you back in the studio with us.
It's great to be here, Anthony. Good to see you.
It's been certainly a crazy market. Well, I don't say crazy is sort of like a word that we just throw around, but a really interesting market and one that we track obviously really closely. And today, kind of looking at the way things have unfolded, especially when you look at equities and the performance of the S&P 500, and then drilling down, of course, to the Magnificent Seven and all that. So here's the question I have for you. Given the performance that we've seen, do you have any concerns about what's coming down the pike for the next 6 months of the year? And we can get into all this in a minute, but there's a lot of, anticipation about what the Federal Reserve might do, what that does to rates, what it does to markets. So what are you actually taking a look at, and is it concerning?
It's a great way to start, Anthony, because a lot of questions that I get from clients are around, can this continue? Can this great upside we've had really for the past 2+ years continue the way that we've seen it play out? And I think it can. I'm certainly optimistic on where this market goes. Are we in for some potential consolidation, whether that's through price or time? That's certainly a possibility because we have moved very, very far from those October lows of last year. But the reason that I can be really optimistic about where we move going forward is the fundamentals, and it's earnings. At the end of the day, earnings drive the direction of the market. And what has been really encouraging to me is that when you look at the earnings across the S&P 500 and really the entire broad market itself, earnings breadth has been increasing. So sure, we might have record concentration in the S&P 500. I think we just passed an all-time record of over 34% of the S&P 500 is now in the top 10 stocks in the index. But beneath the surface, you're seeing earnings start to work. The law of large numbers is going to have earnings for those big Magnificent Seven names start to come down and normalize, which is fine. But the rest of the market itself is starting to play catch up, and I think the price action is eventually going to follow.
Yeah, it's when you talk about the Mag 7, it's almost looking more like a fabulous 4 going forward. There are a couple names that maybe haven't been performing as well out of the 7, but historically, looking at what they did last year and performance-wise, it was up somewhere around 100% returns for the year. So I think a lot of people look at the AI story and they think, well, how much further can we go? So what are some maybe specific areas of opportunity that you see that you recommend to investors, given what we know and what you just said might be coming?
Yes, so artificial intelligence is definitely here to stay. I think the companies have proven that time and time again with respect to earnings. So for me, as I look for opportunities in artificial intelligence, or really just the secular growth trends that are going to guide this market going forward, I say look for artificial intelligence 2.0. So what are the next set of companies outside of just semiconductors that are going to be able to drive this artificial intelligence stream to a reality? In order to build the data centers that we have, they throw off a ton of heat. The data centers right now in the US alone consume more energy than the entire United Kingdom. Think about that. That is a ton of energy, and they have to be cooled. And as you get more and better chips, they use more and more power. So we have a problem with cooling. There's a ton of companies in the electrical equipment segment within industrials that provide cooling solutions. If you look to build out data centers, what does that require? CapEx, actual buildings being built. So maybe look for some machinery companies. So there's a lot of ways you can play it, even utilities, sleepy utilities. Those who are involved in electric utilities or renewables, those stocks have taken off, and I think there's a ton of runways. Their earnings start to accelerate because they are benefiting from these trends of more energy and trillions of dollars that are going to have to be spent to make this AI dream a reality. I actually had lunch with a few senators a couple weeks ago talking just about the energy theme from both parties, and they covered the Sun Belt. And what was really interesting is that every single one of their states is currently having a quiet energy crisis. They don't have enough power to meet the needs of the data centers that are moving in and provide cooling for their citizens during the summer. So there's a ton of runway for this theme to be built out over the long term.
Yeah, our Chief Investment Office, led by my colleagues Amante Muhadini and Michelle Liberty, just did a conversation about how there are so many natural resources that are needed, like water, for example, especially in the cooling area, to make sure that these AI-driven, farms, these technology farms, can actually run. So there's a lot of conversation happening on that side as well. When you talk about the utilities, which you said sleepy utilities, the opportunities for an investor on that side of the investment pool seems massive.
It is. It is absolutely massive. And even going beyond that, as you peel back the onion further,
right,
how are you going to build these utilities? What do you need to connect the cables? You need copper. You need silver. Silver doesn't just look nice. It actually has industrial applications. 50% of the owned silver goes to industrial applications, and it's used in electric cars. It's used in data centers. It's used in cords. So a ton of ways you can apply this to utilities, mining companies. You can keep going down the rabbit hole.
Yeah, honestly, it is. You can sort of get stuck in that spiral, but it's interesting. And of course, when we're looking at a broad spectrum and a diversified portfolio, there are lots of opportunities if you want to play either directly with the AI space itself or the beneficiaries of AI, and clearly that's what we're talking about here. What about on the if you look outside of the U.S., international markets have sort of been quietly happening, and we're talking a lot about what's happening in the U.S., but there seems to be some action happening. Do you see opportunities right now internationally?
Yeah, Anthony, international was probably a dirty word for the past 10
feels like
plus
it has
years.
been, yeah.
Just the underperformance has been acute. But if you weren't paying attention to it, you certainly are now after all of the political elections that have happened in Europe and Mexico and around the rest of the world. But looking beyond just the political volatility that we've seen, there are great opportunities. And again, it comes back to the fundamentals and to earnings growth, because the economies that are underlying these different regions have been better than feared. You're seeing earnings come in better than feared and actually starting to accelerate higher for international developed markets. So, Europe, there's plenty of ways to selectively play and avoid some of that political risk. But emerging markets are an area that a lot of investors are very underweight to. And I think there's a huge opportunity over the long term to be invested in emerging markets. And you don't necessarily just have to own China either. This is why balance in an active approach makes a lot of sense to these parts of the world, because you look at what China has lost. I was just in India during the week of the elections, and the amount of money to hit their growth goals that are going to be spent both from private and public sources is huge. Again, it's in the trillions of US dollars, and every single management team that I spoke to was incredibly optimistic about their guidance going forward and the runway of growth regardless of who's in power, in order to realize a growing middle class and changing supply chains from around the world. So there's a lot of reasons for investors to get exposure to it.
India is such an attractive story. I mean, when people think India, they don't automatically think it's growing to be an economic superpower, but it's in third place right now behind China and U.S., and it could surpass China at some point in the next few years as the second biggest economic superpower in the world. So don't sleep on India there, but especially when it comes to EM. But even on the developed side, there's still opportunities in Japan as well.
Absolutely. Japan is benefiting from structural reforms. It has taken a long time to get, I'd say, Japanese corporates to implementing Abe's third arrow of returning money to shareholders, of properly building and incentivizing companies, and you're seeing it play out. You're seeing dividends, you're seeing share buybacks. That's why Warren Buffett is actively investing in Japan, because there are long-term opportunities. And I think the best opportunities in Japan right now are Japanese banks, because Japan is finally exiting its period of deflation, and the best way to get exposure to that is through the private banking sector that has exposure not only to Japan but also to the other emerging economies around it, which, as we know, are doing better from an economic standpoint than we thought last year. So again, lots of opportunity around the world.
Excellent, Matt. Thank you. And given where other central banks are, ECB and Bank of Canada reducing rates recently, and seemingly it looks like we might get one rate cut out of the U.S. Federal Reserve, perhaps September or December. But the jury's out. We'll see what Chair Powell does over the next couple of meetings and statements. But seems like as we're looking down, we're looking at less pressure on pricing and coming down on the inflation side. Even internationally, it seems to be a bit of a trend that's happening. So it seems like good news, economically speaking.
Right, and good news should be good news. I hate when I hear
good
headlines
news is bad news, right?
about bad news is good news,
That's right.
good news is bad news. At the end of the day, good news should be good news, and I think that's what we're starting to see play out. And just like you said, Anthony, for me, the Federal Reserve, it is a when, not an if situation.
Right.
It's clear the Fed still has an easing bias. They may have been slightly more hawkish on the margin than people were expecting, but it's clear rates are going to come down. My base case is December, but to me, it really doesn't matter when it actually happens because we know there's going to be less pressure. Companies can operate in that environment, and we're not seeing any issues within fixed income or financing for larger, even smaller companies right now. So the environment is very constructive for equities to continue to do well.
Excellent. Matt, thank you so much. Good to have you join us in the studio today. Matt Orton from Raymond James. Come back soon.
Absolutely.
Thanks, Matt. Great. Thank you very much. And thank you very much for joining us. Lots more information from our great partners on our platform at ubs.com/views. That's our Insights website, plus all of the content from our own chief investment offices there as well. Plus, you can follow UBS on all the major social media channels, including Instagram. Our dedicated at UBS Trending channel is there, so give us a follow when you have a moment. And in the meantime, if you have any questions about what Matt and I spoke about today, make sure you're talking to your financial advisor. Until next time, I'm Anthony Pastore. We hope you have a great day, everybody. And remember to keep your eyes on what's trending. We'll see you soon.